comprehensive analysis of AbbVie Inc. ABBV. Through Warren Buffett's investment lens, one business quality and economic moat analysis. AbbVie Inc. NYSE. ABBV operates as a global biopharmaceutical company that discovers, develops, and markets advanced therapies across multiple therapeutic areas, including immunology, oncology, neuroscience, and aesthetics. The company was spun off from Abbott Laboratories in 2013, inheriting a strong portfolio that included the blockbuster drug Humira. With a current market capitalization of $393 billion in operations spanning over 170 countries, AbbVie has established itself as a leader in the pharmaceutical industry. 1.1 revenue model and business operations. AbbVie generates revenue through a diversified business model with multiple streams, pharmaceutical product sales, the core revenue driver, contributing the majority of AbbVie's $56.3 billion in 2024 revenue. Key products include immunology portfolio, Skyrizi, $11.7 billion, Rinvoq, $6 billion, and Humira, $9 billion, despite biosimilar competition. Oncology portfolio, Imbruvica, $3.3 billion, and Venclexta, $2.6 billion. Neuroscience portfolio, Botox, therapeutic, $3.3 billion, Vraylar, $3.3 billion. Aesthetics portfolio, Botox, cosmetic, $2.7 billion, Fuvdarm, $1.2 billion. Intellectual property licensing, AbbVie earns substantial royalties and licensing fees from partnerships and patent licensing agreements, particularly as Humira faces biosimilar competition. Strategic collaborations. The company engages in co-development and co-commercialization agreements, such as the partnership with Genmab for cancer treatment Epkinly. 1.2 competitive advantages and economic moat. AbbVie possesses several competitive advantages that contribute to its economic moat. Diverse product portfolio, with 27% of 2023 net revenues coming from immunology products, and significant contributions from oncology, neuroscience, and aesthetics. AbbVie has reduced its dependence on any single product. This diversification was particularly valuable as Humira faced biosimilar competition, with the company returning to growth in 2024. Intellectual property and patent protection. AbbVie maintains a strong patent portfolio that provides exclusivity for key products. While Humira has lost patent protection, newer drugs like Skyrizi and Rinvoq are protected by patents that extend their revenue potential. Research and development capabilities. AbbVie invests significantly in R&D, with a pipeline containing multiple promising candidates across therapeutic areas. The company's acquisition strategy, including Allergan in 2020, has enhanced its pipeline and market position. Global commercial infrastructure. With operations in over 170 countries, AbbVie has established distribution networks and commercial relationships that provide competitive advantages in reaching patients and healthcare providers globally. Despite these strengths, AbbVie faces challenges including patent expirations and biosimilar competition, particularly for Humira, which has seen revenues decline significantly, 49.1% decrease in Q4 2024. However, the company's ability to grow despite this challenge demonstrates the resilience of its business model. Table AbbVie's economic moat assessment using Buffett's framework. Moat component. AbbVie status assessment. Brand value, strong portfolio with multiple blockbuster drugs, strong patent protection, robust IP portfolio though, with some key expirations. Moderate switching costs, high for specialty medications in immunology, oncology, strong cost. Advantage scale advantages in R&D and manufacturing, moderate distribution network, global commercial infrastructure, strong. To management quality assessment, Warren Buffett places immense importance on the quality and integrity of management when evaluating investment opportunities. AbbVie's leadership team demonstrates several characteristics that align with Buffett's preferences for capable and trustworthy stewards of capital. Leadership stability and experience. Under CEO Robert A. Michael, AbbVie has navigated the challenging patent cliff for Humira, while continuing to deliver growth through other products. The board of directors includes experienced leaders from diverse backgrounds including medicine, academia, and business. providing comprehensive oversight. Capital allocation strategy. Management has demonstrated strategic capital allocation through strategic acquisitions. The $63 billion acquisition of Allergan in 2020 diversified AbbVie's portfolio into neuroscience and aesthetics, adding Botox and other products. R&D investment. Significant investment in research and development, with multiple pipeline candidates advancing through clinical trials. Shareholder returns. Consistent dividend payments with a current yield of 2.95%, appealing to income-focused investors. Shareholder alignment. Institutional ownership stands at approximately 71.71%, with major stakeholders including the Vanguard Group 8.67% and BlackRock 5.19%. This institutional interest suggests confidence in management strategy. However, insider ownership is relatively low at 0.16%, potentially less aligned with Buffett's preference for significant insider ownership. Transparency and communication. Management provides detailed financial disclosures and regular updates on pipeline progress. The company's guidance for 2025 adjusted diluted EPS of $12.12, $12.32, and reaffirmed expectations for high single-digit compound annual revenue growth through 2029 demonstrate forward-looking transparency. However, some aspects might give Buffett pause. The company's debt levels increased significantly following the Allergan acquisition, with long-term debt standing at $62.96 billion as of June 2025. While management has been reducing this debt, the elevated level remains a concern from a conservative investment perspective. 3. Financial strength evaluation. Warren Buffett prioritizes companies with strong financial fundamentals, including consistent revenue growth, healthy profit margins, high returns on equity, minimal debt, and strong free cash flow generation. AbbVie's financial profile presents a mixed but generally strong picture when evaluated through these lenses. 3.1 Revenue growth and profitability. AbbVie has demonstrated resilient revenue growth despite patent expirations. 2024 revenue. $56.3 billion, representing 3.7% year-over-year growth. Q4 2024 revenue. $15.1 billion, increasing 5.6% year-over-year gross margin. 70.9% GAAP gross margin in Q4 2024, with adjusted gross margin of 83.8%. The company's product diversification has allowed it to continue growing despite Humira's revenue decline. 3.2 Return on equity and invested capital. Buffett places great emphasis on return on equity ROE and return on invested capital ROIC as measures of management's ability to generate value from shareholder capital. Return on equity normalized. 541.65% return on invested capital normalized. 28.35% return on assets normalized. 13.56%. These exceptional returns, particularly the ROE, indicate highly efficient use of shareholder capital, though the extreme ROE figure is influenced by the company's financial structure. 3.3 Debt levels and financial health. From a balance sheet perspective, AbbVie shows both strengths and concerns. Total debt, $70.48 billion, short-term $7.52 billion plus, long-term $62.96 billion, debt-to-revenue ratio, 1.14, interest coverage ratio, 7.73, improved from 1.93 in previous periods, current ratio, 0.7 for quick ratio, 0.48. While the company's debt levels are elevated, its improving interest coverage ratio indicates better ability to service this debt. The low current and quick ratios suggest potential liquidity concerns, though this is common in the pharmaceutical industry where companies often maintain minimal cash relative to assets. 3.4 Free cash flow generation. AbbVie demonstrates strong cash flow generation, which supports its dividend payments and debt reduction efforts. Renaissance Investment Management highlighted AbbVie's high free cash flow yield as an attractive feature. Tabled AbbVie Financial Health Assessment 2024 to 2025. Financial. Its metric status, Buffett Standard Assessment revenue growth 3.7%, 2024. Consistent growth, good. Profit margins, 83.8% adjusted gross. Consistently profitable, excellent. ROE, normalized. 541.65%, 15% plus, exceptional, ROIC. Normalized, 28.35%, 15% plus excellent. Debt revenue, 1.14 minimal debt concerning interest. Coverage 7.735x, good for intrinsic value estimation. Warren Buffett focuses on intrinsic value, the discounted value of the cash that can be taken out of a business during its remaining life, rather than prevailing market prices. Estimating AbbVie's intrinsic value presents challenges due to the complexity of pharmaceutical cash flows. But we can utilize several approaches. 4.1 Discounted cash flow analysis, applying a simplified DCF valuation to AbbVie. Current price, $222.47 Morningstar fair value estimate, $315 theoretical. Upside, 41.6% based on these figures, however. Morningstar also notes that ABBV is trading at a 643% premium to their fair value estimate, suggesting significant overvaluation. This discrepancy highlights the challenges in valuing pharmaceutical companies with changing product dynamics. 4.2 Earnings power value. Using AbbVie's earnings power as a valuation basis, 2024 adjusted diluted EPS, 10.12202 $5 guided adjusted EPS, $12.12, $12.32 PE ratio normalized, 21.01. Assuming a conservative earnings growth rate of 5 to 7% annually and a PE multiple of 15 to 18x, AbbVie's intrinsic value would range between $180 to $220 per share, suggesting the current price may be fairly valued to slightly overvalued. 4.3 Dividend discount model, given AbbVie's strong dividend history. Current dividend yield, 2.95% forward. Dividend growth, historically consistent increases. A dividend discount model with a required return of 8% and dividend growth of 5% would suggest an intrinsic value of approximately $200-$210 per share. 4.3 Dividend discount model given AbbVie's strong dividend history. Current dividend yield, 2.95% forward. Dividend growth, historically consistent increases. A dividend discount model with a required return of 8% and dividend growth of 5% would suggest an intrinsic value of approximately $200-$210 per share. 4.4 Valuation challenges and considerations. Valuing AbbVie requires careful consideration of several unique factors. Patent expirations, ongoing impact of Humira biosimilar competition and future patent expirations, pipeline success, value of clinical pipeline and potential new product approvals, debt reduction, impact of decreasing debt levels on future cash flows, regulatory environment, potential changes in drug pricing regulations. Based on the available data, AbbVie appears fairly valued to slightly overvalued based on current earnings power, but may have upside potential if new products exceed expectations. 5 Long-term prospects and risks. Evaluating AbbVie's long-term potential requires examining industry dynamics, competitive positioning, and various risk factors that could impact the company's ability to compound capital over the next decade. 5.1 Industry outlook and growth potential. The pharmaceutical industry presents both opportunities and challenges. Aging population, demographic trends support increased demand for pharmaceutical products. Innovation potential, advances in biologics, gene therapies, and personalized medicine create new treatment paradigms. Global expansion, growing middle classes in emerging markets increase access to innovative medicines. AbbVie is positioned to benefit from these trends through its diverse product portfolio and global presence. 5.2 Competitive threats and market position. AbbVie faces competition from several fronts. Other pharmaceutical giants, companies like Pfizer, Roche, and Johnson & Johnson, have substantial resources and competing products. Biosimilar manufacturers, companies developing biosimilar versions of AbbVie's products, particularly Humira generic competition for small molecule drugs facing patent expiration. AbbVie's competitive position appears strong due to its product diversity, intellectual property portfolio, and commercialization capabilities. 5.3 Key risks and challenges. Several risks could impact AbbVie's ability to compound capital over the long term. Patent expirations, continued loss of exclusivity for key products beyond Humira regulatory changes. Potential drug pricing reforms could impact profitability. Pipeline failures. Failure of clinical pipeline candidates to gain approval. Debt burden. High debt levels could constrain financial flexibility. 5.4 Capital compounding potential for AbbVie to compound capital effectively over the next decade. Several conditions must be met. Successful replacement of Humira revenues with newer immunology products. Continued innovation through R&D and strategic acquisitions. Debt reduction to improve financial flexibility. Expansion into new therapeutic areas and geographic markets. If these conditions are met, AbbVie has the potential to deliver moderate to strong returns, supplemented by an attractive dividend yield. 6. Final verdict. Buffett-style investment suitability based on comprehensive analysis through Warren Buffett's investment principles. Here is how AbbVie Inc. measures up against each of the key criteria. A. Understandable business. AbbVie operates in the pharmaceutical industry, which is reasonably understandable, though complex in its R&D and regulatory aspects. Rating. Good B. Consistent earnings. AbbVie has demonstrated consistent earnings despite patent challenges, with guided 2025 EPS growth. Rating good. C. Good ROIC. AbbVie's ROE of 541.65% and ROIC of 28.35% far exceed Buffett's typical thresholds. Rating. Excellent D-low debt. With a debt-to-revenue ratio of 1.14 and high absolute debt, this area concerns Buffett's principles. Rating. Poor E. Attractive valuation. The stock appears fairly valued to slightly overvalued based on current earnings. Rating. Fair. F. Long-term moat. AbbVie possesses a durable economic moat through patents, portfolio diversity, and commercial capabilities. Rating good. 6.1 Overall assessment. AbbVie Inc. partially meets Warren Buffett's investment criteria but falls short on several important dimensions. While the business is understandable, generates excellent returns on capital, has a durable economic moat. The high debt levels and fair valuation make it not ideal for a traditional Buffett-style investment at current levels. The company might be appropriate for investors seeking a combination of income and moderate growth, who are comfortable with the risks inherent in the pharmaceutical industry. Buffett would likely prefer to see lower debt levels and a more attractive valuation before considering an investment. For those interested in the pharmaceutical sector through a Buffett lens, potentially more suitable candidates might include companies with stronger balance sheets and more attractive valuations, though these would need to be evaluated based on their own merits against Buffett's criteria. Table AbbVie Inc. Buffett-style investment suitability summary criterion assessment explanation. Understandable business. Good pharmaceutical business model is reasonably understandable. Consistent earnings. Good demonstrated resilience despite patent expirations. Good ROE, ROIC, excellent exceptional returns on equity and invested capital. Low debt, poor high debt levels despite recent improvement. It's attractive valuation, fairly valued to slightly overvalued based on earnings. Long-term moat. Good, durable competitive advantages in multiple therapeutic areas. Overall suitability, moderate, partially meets criteria, but debt and valuation are concerns.